Hey guys, Bob and Phil back again with another Trade Genius podcast. So in this episode, we're going to dive into what's been going on behind the scenes with all these exchanges. We're going to talk about proof of reserves, what you should be doing and where you should be careful and where we're all going from here. And Bob's going to chime in on some of the political connections that's been going on with the FTX debacle. So stay tuned. We got a good one for you.
Trade Genius.
All right, Bob. So a lot of stuff going on in the crypto world right now.
Oh, it was a really boring weekend. I don't really know what to talk about, Phil. So, this is really interesting. So it went from, a run on the bank, which can happen because if you think about it, these crypto exchanges don't have backup like you do for like a central bank to a bank, right? So,
Yep.
Okay. These guys not mature enough to, oh my gosh, this dude had a back door and he was funding the age old, I got caught losing money gambling. And so I'm taking money from mom. And then the whole thing blew up on him to, oh my gosh, none of these guys have reserves. and none of them are safe. And then, then the tragedy with, FTX US was supposed to be rock solid, but the dude built a back door into being able to, get it hacked. And so now everybody's really, scrambling. But this is far from over. And so, FTX, I think, is the beginning of, I believe, is a daisy chain. And I know I'm telling you something you already know. I'm really talking to the audience here. Is that, Crypto.com now, and then you have a situation now with some of the other guys trying to jump around and show that they have reserves. But I think Crypto.com's gone, and just about everybody that had projects that were funded by FTX are gone. And a lot of these guys use these things as reserves, like it's like me saying, I got money in the bank, but the money I have in the bank is the money that I lent my sister who never ever pays me back, And I think this is the problem we have here, Phil. And this is far from over. And the thing I worry about, if it was a crypto only thing, it's okay that, this is pretty highly speculative Wild West kind of stuff, but you got like mainline hedge funds and mainline money managers that invested significant dollars out of their hedge portfolios into this world without doing adequate due diligence. And my fear is that it's going to blow back into what I call into the real world, right into the fiat world. And I think this thing's going to be rolling out for a couple months. And then also, maybe we'll talk at the end here, we'll talk lawsuits. So I'm going to stop it there. But Crypto.com's in trouble. I think it's fair to say, you guys, if you have money at Crypto.com and you can still get it out. I'm hearing rumors that people are already getting delayed or failure to withdraw. So you want to add anything to that, Phil?
Yeah, and then also too, and I think you had picked this up too for today's topic was Binance Reserves are. And I'll segue into the proof of reserves thing from this, but basically, what the problem we're seeing is that a lot of these exchanges came up with their own tokens, which in and of itself is a decent idea. The problem is minting a billion of them and then assigning a value to them and then saying we're worth X amount of money, right? You're creating this value out of thin air, basically. There is a use case for that. And I do think holding them as a discount token, basically for your trading fees. I mean, that makes sense, or maybe as, shares, if you believe in something, right, you buy shares of it and that can work in a similar way. But when you're creating a huge float of it and then it's saying, oh, we're worth X billions of dollars because you just minted way too much of it, right? That's a problem. And it's not a clear picture because it comes down to exit liquidity. It's not like a stock and you're on the American Stock Exchange and there's tons of liquidity, right? If you need to, if these guys want to dump these billions of dollars, they're not getting billions of dollars of this stuff. It's all paper market cap, right? And that's the problem. They're probably going to be able to cash out a fraction of what they're claiming that's worth, even though the market cap of that token is in the billions. You don't have the exit liquidity for that. So it's a false sense of reserves. And then they're also moving stuff around, right? Like the previous slide here was talking about how Crypto.com had a suspicious transfer to Gate.io, and then Gate.io could have used that for proof of reserves, and then they sent it back, but not all of it. Like there's all these weird games, and you have to understand these guys are not, say what you want about the state of regulations for crypto in the US. I agree. There's too much gray area still. However, these guys in the US are under tight regulations, and they have to be very, very strict on what they do with customer funds, right? They don't have the freedom to play around like these guys do overseas. So there is safety in that, and these American exchanges are a ton more safe than these guys overseas. So it's not like the whole space is bad. Coinbase and Kraken and Gemini and these other US exchanges have to follow these regulations, so there's safety in that. And we're not just making this up too. I mean, this is stuff that's on chain. We're seeing these snapshots of these exchanges moving stuff around. Here's Huobi, or however you want to pronounce it, but they're a Asian-based exchange. They're moving from Binance into OKX. I mean, it's just like what's going on, So when they say proof of reserves, that's a new buzzword this week, right? It doesn't mean anything because you don't really see what's going on with liabilities. I do agree there has to be some sort of proof, but I think we got more work to do in that regard, as far as how these exchanges are going to be able to prove that they're able to back up customer deposits. That could be a smart contract that's tied to a wallet of customer funds, and then the reserve wallet to back those funds up has to be a smart contract, and it's or customers have to physically use like a hardware key to move funds out or into the trading pool. They just can't have free willy-nilly, do whatever we want with customer funds, because the era of that is over, I'm pretty sure. So just keep in mind, proof of reserves is a buzzword, doesn't really mean a whole lot, and there's more work to be done on that. So don't let that give you a false sense of security, because it's really easy to spoof that stuff still. That's my take on what like in the last few days of what's been transpiring anyway.
Yeah, and before you flip the slide, Phil, I want to also add, this is no different than our banking system, guys. So we talk about reverse repos and Fed balance sheet. The banks play this shell game too. So they'll still give the Fed assets that they get to ascribe a value to, and they get cash, and then at the end of the quarter, when they have to report their financial stability, it looks like their fortress. And then right as soon as it's over, the Fed gives them back their asset that's likely worth less than what they said it was. But they passed a FASB law that says, hey, you only have to reduce the value of this asset unless it's critically impaired. And so this is how 2008 happened, guys. So that's why people always say this is crypto's version of 2008 right now, is when people were assigning values to things that don't have that value in real life. It just has that value because somebody marked it. It's called mark to fantasy. And that's what we're dealing with. But our banking system works the same way. It's just that there's a central bank that could just print dollars off. And at some point in the future, this is how it all ends for the U.S. too. I mean, other countries too. But at some point, people are going to want something hard back, and all they're going to be getting is dollars thrown at them that are worth less and less and less. So the reason why this is bad is because the next slide, I think, kind of tells a more sinister tale.
And I had a thing to jump in before we get to that too. That along those lines
continues. Go ahead.
Yeah. Well, along those lines, just coincidentally, I was talking to a buddy of mine this morning, and he was like asking about, this whole thing, right? FTX. And he's like, yeah, you just can't, you can't withdraw money. And I'm like, well, you should be able to. I mean, you should be able to from your bank, right? And he's like, well, I got a story about that. Long story short, banking at a major national chain bank, the local branch, he got into a disagreement. He got mad at him and said, I want to close my account. And he wanted the cash, not a cashier's check. He wanted the cash. They said, well, you're going to have to wait till next week. We have to bring that in. So you think you're one-to-one backed on your accounts, even at these local branches? You're not. And they got to come up with ways to get the money there to you if you want a large amount of cash. And that plays into a whole other subject about how the government really doesn't like you dealing in large amounts of cash anyway. But it shows you the fractional reserve nature of our banking system. So anyway, that's just kind of a real world example of that. Going
Yeah.
into our next slide.
Yeah, and I'm sure everybody has seen a version of this out there probably on the internet now. But this is a big deal, And I'm going to make an assumption here, it's not popular. I'm going to say that everything's on the up and up. But does this look like everything's on the up and up? No. It looks like a typical. This is the way we typically deal with things in the United States, right? You have somebody that's working as an advocate. Can't get access to the congressperson unless money was thrown at the congressperson, and then they turn right around and they support your venture, right? Or they destroy your enemy. And now this has gone international, and so you know, but this really reeks of dirtiness, even beyond this thing here. So it started with. I think a lot of this I think, how Trump got in trouble in the first place with the deep state because, and reason why they use Russia, 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 is because they know they have an exposure in Ukraine one way, shape, or form. We know that from Hunter Biden, right? And so, but we don't know how deep it goes. And I think this is not just a Democrat thing, as Phil pointed out this morning to me when we were talking about this, is that I think I think there's some other Republicans engaged there. Republicans are enthusiastic supporters of sending money to Ukraine. There's always been this hue and cry of where's this money going, right? Well, like what happened to the money when it all went to Iran? Remember the pallets?
Mm-hmm.
And so, but now we had a situation where Zelensky came out and said, hey, FTX came out and said, I'm setting up a charitable trust to support the people in Ukraine, right? And that kind of set the stage for Zelensky saying, hey, we're going to invest in that. And then that money, it's all fungible, right? The next thing you know, FTX is sending money back to the mostly Democrats, some Republicans, and now we find out that the money's been commingled. So I think what's going to come out of this, Phil, is that usually they can sweep this stuff right under the rug, but people lost real money in the U.S. U.S. citizens lost real money. Lawyers are going to go ahead and do the Bernie Madoff recovery. And so they may have to disgorge the money that they received as political contributions because we don't know if it's commingled funds, right? And you can make the case saying, hey, that money that was sitting in my FTX US account got hacked. Okay, he had a back door, and the claimants are going to claim that money because they can't get it from anywhere else because how long it took to get the Mt. Gox money back, right? So
Right.
They're going to go after the easy money fast, and they're going to go after all these political people saying, hey, you received. I'm hearing this up to $100 million was given in political contributions.
Wow.
I think it's 3-1, right? 75 to D's, 25 to R's.
Mm-hmm.
And I think it's going to become the exposure is going to. I think is going to be uncomfortable for people. But it gets worse, Phil, is that this guy Friedman, however he says his name, he
SBF.
Yeah, SBF. So, he set up that sister company to do the trading for him, a classic, backdoor to the trading account. But his girlfriend or live-in or lover or whatever was doing it. Her father was Gary Gensler's boss.
Yeah.
And this guy was dealing with Gary Gensler. So he had a shield already to keep anybody from really poking their nose too hard in it. Because who wants to get on the wrong side of Gary Gensler when you're in the financial business? Because
Right.
He'll never go after you, but he'll send somebody else after you, or you may get a call from the DOJ.
Right.
So this guy already had his shield up.
Yep.
But my conspiracy theory on all this, Phil,
Let's hear
is
it.
that I think SBF was trying to take Binance out, and I think Binance is probably dark money backed by the Chinese government, and I think they took FTX out first.
Ooh. That's,
I don't think
I haven't heard that one quite yet. That's a good one.
I don't think they wanted this thing exposed.
Mm.
Why would you expose such a gravy train like this? They could easily plug that hole. This guy panicked, when he couldn't get his money, and he panicked. They got too visible, nobody would touch him.
Mm-hmm.
And Binance took him out with one shot. I mean, one clean shot to the head, and he's gone. And all this thing unraveled, and he panicked, and he took more money, and who knows? He's trying to pay off other people who may really kill him. Who, we don't really know all the things. The guy might say, I don't care how you get the money. You better get me my 20, 40, 50 mil, back tomorrow. And then he's like, well, screw that. Sorry, FTX, US customers, I'm grabbing your dough because I want to live another day. So
Right.
I think this thing I wish I was a screenwriter. This would be the movie of the century. I don't think we know how deep this can go. And I think it really, really it affects the politics in the U.S. and I don't think we know about that yet. And I don't think this can be covered up so easily because it's going to get into litigation because people lost millions of dollars in this, and celebrities are involved, and
Right.
and so that's where it is. Hey, I'm not accusing anybody of anything. I'm just saying it kind of stinks, and I think we need to find out where the smell is.
Yeah, right. If there's smoke, there's fire usually, and this thing isn't anywhere near done unraveling yet. They're just now getting into investigations. And to that movie plot, the guy who authored the Big Short book was actually embedded with SBF for like the last 4 or 5 months because he was doing a write up on him. Believe it or not. So
Whoa.
we are going to get a book out of the whole deal.
He didn't realize how the ending was yet.
No, he had no clue. It just happened. Yeah,
Wow.
yeah,
Yeah,
crazy, right?
I don't think he expected this. But did you see him the last couple weeks before? I mean, the guy was definitely jacked up. He was
Oh,
like this. He was
yeah.
like freaking
Um,
out.
Maybe we'll play that at another time. But yeah, oh, man, he looked like he was on like the biggest speedball you've ever seen. Like he was just like jittery, and he looked really strange because I've seen a number of interviews, and that one I was going like, good grief, did you one too many Adderalls there, buddy?
Well, I think he knew the thing was ending, and
Yeah,
he couldn't figure out how to get out of it, and
in
all the doors
hindsight, yep,
they were all closing on him.
yep,
But anyway, but from us looking at it from a stock standpoint, and is that you know, I personally, you can disagree with me, Phil. I take this, crypto a lot better than I do, but I think the vast majority of alts are dead, and I think now we're getting that cleansing like we had in the auto industry in the 20s, where there was 50 car companies, and you end up with three or four.
mm-hmm,
I think only the very best projects with really clear use cases, like explain it to Bob kind of use cases
mm-hmm,
versus these kind of bizarre, this could be kind of use cases. I think speculation is dead. The United States is going to clamp down hard on anything that they can't have proof of reserves in a lockbox in the U.S. And I think that's what's
right,
coming. But I think it's going to help. Look, Coinbase is a public company. It may take a hit short term on this because of trading volumes will fall. I think Mar will probably get a hit for that, plus what we talked about on Friday with mining going negative in terms of profitability. And then Bitcoin may take a hit too, so there might be chances to get into something. But after this, I think it's going to be a cleansing,
yep.
and then I think we're going to get a great opportunity. And Phil, if you guys know anything, I'm not a like jump up and down crypto guy, but I think this was necessary,
Yep.
from an economic standpoint to get the good stuff out there and get rid of all the noise. And the good news is that these speculators that are still around are going to pour more of their money into Bitcoin. They're going to put more of their money into gold and silver. So the things that used to be before all this crazy stuff, I think those things are going to get some lifts too, and we trade those a lot. So come trade with us if you want. And we have Black Friday specials starting. So this is the 2 weeks where
Yes.
you're killing me, Larry. We got some really good prices for you guys. And if you're a customer, you can add on to the extend your subscription with us. So
Yep.
we just
Renew.
add that and extend it, and it's a great price. I say probably 70% of our customers renew this time of the year, and we want you to take advantage of these good prices. It's a win-win for all of us, and I think we're doing some really good work on the trading side. And Phil's definitely kept you guys out of a lot of trouble with the stuff on the crypto. But on the stock side, this crazy volatility is just a money machine for us. So, and I don't think it ends anytime soon. We'll get election stuff coming up soon. And if it goes Dems all the way, then the market's actually going to go haywire. If we get a split Congress, I think it calms down. And then when the Republicans start their hearings, it's going to go haywire in the first quarter. So haywire means opportunity, and also some really cool things are happening in the options front. We'll talk about that later this week because I think there's a really good way to make money with less risk with this new change they made to SPY contracts. So stay tuned. And Phil, leave the last words to you.
Yeah, I think in summary, get your tokens off of exchanges if you're, especially if you're in the overseas exchanges. I think there's a high risk right now, and if you're not trading, take them off. Let the dust settle. If you're in the U.S. exchanges, I think those guys are safe as far as we can tell. But again, if it's long term, take it off. There's really no sense for having them have custody. The safest custody is in your own custody, so hardware wallets or wallets that you control. And that's primarily the biggest point, I think, right now. So anyway.
Yeah, and if you're offshore and you haven't declared that you trade cryptos to the IRS, you better make sure you put it in your tax return this year, because there's a good chance that your names are going to start popping up in as potential claimants to money, and you don't want to be caught telling the IRS one thing and doing another. So just you got to smell good too.
Yep, definitely. All right, guys, thanks a lot for watching. Please hit that like and subscribe button. We really appreciate it. Bob, thanks as always. And we'll catch you on tomorrow's podcast. See you later, guys.
Trade Genius.